Welcome to Bitcoin Escape Plan. Price of Bitcoin is dropping, and yet all anyone can talk about is the Japanese yen carry trade unwind. How much are those two events correlated? We're going to talk about it in today's video. Subscribers already know we've been talking about this downside price movement for several months now on the channel. And these levels that people are talking about for the effect the Japanese yen carry trade is going to have on Bitcoin itself, we've already factored them in. We've been talking about them on the channel since December. Make sure that you're subscribed. Before we get into the main bulk of the video and a 4-hour analysis of Bitcoin that I know you guys cannot wait for because we broke through some key levels, they're going to be very important. Let's go over to bitcoinescapeplan.com where you can get more analysis sent directly to your email, as well as the paid email previews. Today's will be up once this video is up. A lot of great content that I've been putting out. Just basically every Monday you get information about the price of Bitcoin instead of having to go back to a video and listen to me ramble for 30 minutes. You can just go get all the levels that are important every Monday. And then one other time per week, I'm releasing these paid previews where we just go more into something key on the charts that no one else is talking about. All right, Bitcoin itself. How we doing? So on the 4-hour chart, which is where we like to start off these videos, there's a couple key things that have happened recently that are actually causing this downside price momentum. So we talked about this when it happened on the channel in middle of January. This is the anchored VWAP. When we lost the anchored VWAP, that was the first time we had touched it in a really long time, basically since November. So this is a key event that just happened on the chart. And I know other people don't necessarily use this indicator. They have all these other levels or things that they want to talk about. Like the people who said that we were going to go to 98, that's cool. I didn't care about exactly where we're going to go to there. I cared about this, the reaction of that. The fact that we broke it and then lost it means that we're bearish, period, until we're able to reclaim it. That's just how reality functions. We may stay below it for an extended period of time now. Talked about it already in other videos, so you can go check that out about the short term, what I think is going to happen with Bitcoin. Just briefly to remind you, I think it's going to chop and find its local high in March, but that means we're going to have to get back to this trend line essentially very quickly, and it's more likely that we continue to break down further, which we will go over a bit later on in the video. So in the short term, this is the major one. So this is Thursday. We had a major sell-off on Thursday. I don't really care what the news event was that caused it. It doesn't really matter. What caused it is that failure of the anchored VWAP. When we failed that, the trend is going to continue downward until we're able to break above key levels. As you can see here, we've just kind of been consistently dropping on the 4-hour SMA for a while, and we already know we're well below both the daily, the weekly, and the monthly SMAs. We've been struggling or dropping for a period of several months now. So there's not really any reason for us to assume strength on the lower time periods like the 4-hour, which is what we like to trade here. But let's see what actually happened from this progression, which is it looks like we bottomed Thursday right at around that 80. What is the exact? The low is 81, almost on the nose, pretty much. So this fib pivot right here, 81. And let's see, where was our actual close over here? So the close for this guy was 81.5, so $500. The close is 82.2. So this is where we just touched is $500 lower than the low there, and about $500 lower than the low there in November. That's not good. Sweeping the lows. Yeah, I don't know how else to say it. That's not good. Oh, no, we're slightly above it. Sorry, it was 80.5, and we just touched 81. So what we're most likely to experience is if we can't show strength at this SMA touch, we're going right back to there, dude. I don't know how to break it to you. That's what's going to occur for the price of Bitcoin. And we'll tie this back into the yen carry trade in a moment, but I really just want you to understand this price movement that we're experiencing now, which I'm going to go over more in Sunday's video, which, by the way, let me know if you want me to do daily videos, if you would prefer daily videos. I'm just going to repeat the same things for Bitcoin every day. And I'm going to have to find other things to talk about, like Ethereum or NVIDIA or whatever. I can't talk only about Bitcoin all the time. You guys, you're going to go nuts if I do that. But let me know in the comments, seriously, if you want me to make daily videos or if you just want other types of analysis besides just Bitcoin. Anyway, so specifically what we're looking for here, this is the same movement that I've talked about. This is all I've talked about for the 106.8K level down to the 96K level. This is the same exact trend that we're now going to watch. Is the SMA is going to come down and continue coming down until we get below this Fibonacci pivot, which means even if we do break back above this one, we're going to have even more pressure to try and get above that, which we will likely fail. And I think it's very likely that the bottom of this progression takes into early February for us to actually see wherever the local bottom is, which quite frankly, it doesn't really matter exactly where it is. There's too many other factors that could cause another sell-off, as well as, I've already stated it multiple times on this channel, the overall bias at the moment is bearish, period. We're in a bear market year traditionally. All of the liquidity that people think is going to enter the market via the stablecoins doesn't enter until next year, not this year. And as we'll get into over the course of this video, the Japanese yen carry trade is going to take away most of the liquidity that otherwise would have flowed to assets like tech stocks and Bitcoin. So this downward progression is more likely to continue than to magically end. But that's what we're looking for now, is a bounce of the 4-hour SMA. It would be really cool if we were able to shoot right up to that, but I don't think so. I think it's more likely we're going to chop around here a little bit, maybe get an impulse higher, since we didn't. Once we touched that one, we were able to kind of hold fairly high above it. Let's see if there's any key levels here. This is 83.5. Oh, did I just delete it? I don't know what I just did. Oh, didn't mean to do that. Oh my God, I'm so good at TradingView. There's not really much holding us there. You can see it did bounce off of, that's a monthly level, 82.5-ish. So that's currently the only thing that's giving us strength above that Fibonacci pivot. And the same thing here. You can see that we're struggling with this one, 84.3. The reason, again, why, I know I talk about this in other videos where I'm actually teaching you analysis, but I always go by weekly and monthly candles because those are lines that I drew last year or 2 years ago that are still useful, that the price is still reacting to. People want to make this really complicated, and it's not. So that's what we're looking for at the moment. I know I just said that, and there's like a million things on this chart. This chart is like way too convoluted for me to say a statement like that with a straight face. Anyways, that's what we're looking for at the moment. We want to see another reaction to this level as well, 84.8. I believe that's a daily close. It's not a weekly or a monthly. And that's going to put pressure. That's going to put pressure, even more pressure, on getting to that fib pivot and this downward SMA trend. I hate to break it to you. I wish I could be like bullish about that, but I'm not. That looks terrible. It does look like we're going to go lower. All right, I'm going to get into the actual purpose of the video now, which is the Japanese yen carry trade. So for anyone who is, I'm going to have to refresh like a million times in this video. My apologies in advance. For anyone who is not familiar with this chart, let's just get ourselves acquainted real quick. This is Japanese yen versus the US dollar. I don't know why the volume looks like that. That's annoying. This is Japanese yen versus the US dollar. I'm going to zoom out so we can see the overall trend. And the overall trend is that the value of Japanese yen in dollars is the lowest it's been since the late 80s and early 90s. Now, we'll go over this in the video, but there was a minor recession in 90 and 91. There is a major recession for Asia, I believe in 98, but it started actually in 95 for Japan, 98 being, I believe, the bottom for the Asian market, as well as the tech stock bubble in the US in 2000 and 2001 also affected it pretty severely. And then there's a steady rise all through. This is actually going to be really important. We're going to correlate this to both gold and the real estate market a little bit later on. There are correlations as well to the stock market, but I don't want this video to be 9 hours long, so I'm going to focus primarily on gold and real estate for that particular trend in 2011, 2012, and how that peaked for Japan during that time where everything else was bottoming. Super interesting, honestly. I learned so much when I was researching for this video. But as you can see, the general trend at the moment is a clear downtrend since that moment where it peaked in 2011, 2012, which again, that was roughly the bottom of the housing market. That's when we started to see a recover as well as a slowdown for gold itself, which we'll go over a little bit later. So that's just the broad idea. Is same as when we do like ETH BTC or the Bitcoin dominance. This is how many dollars you get for your yen, which is at a historic low, or not quite low, but very low on the chart relative to where you would want it to be if you wanted to continue borrowing Japanese dollars, which for anyone who is not familiar with the yen carry trade, the yen carry trade involves borrowing Japanese yen at low interest rates, and we'll go over the exact details on that, and investing in higher yield assets, typically US dollars or other currencies like Bitcoin or US tech stocks. Strategy profits from the interest differential and a weakening yen. So what does that mean? That means essentially when we go over, where is it? The interest rate. So this is how much it costs to borrow Japanese dollars. As you can see, that's really low. Negative 0.1% is what it costs from 2016 onward. And I believe earlier than that too. I can't see data for that much more than that. But they changed their policy in early 2024 where they started to raise it. So now it costs more money to borrow Japanese dollars. So what people were doing for decades, for like a really, really long time, is they'd go over and borrow Japanese dollars at negative 0.1%, so they're basically paying you to borrow those dollars. And then they would take it and then they would go and buy Japanese or US Treasury bonds, for example, and you would get the difference between that. So you get 4.2, 4.3% yield, again, on borrowing an asset essentially for free, as long as they can continue to prop it up. But what we saw happen in 2019, both for the US and for the Japanese bond market, we have a bottom around the same time. But it's a pretty clear trend for Japan now where they want money to come back to Japan from 2019. They're really feeling pressure. They're having to raise the bond rate over that time. And what this means essentially is like if I wanted to borrow Japanese debt, I'm doing it primarily because I want to sell it and I want to do something else with that, whether I'm buying US debt, whether I'm buying US tech stocks or Bitcoin or whatever. I want to do that because if I were to borrow the Japanese dollars and then buy Japanese bonds with it, I would make no money. I would make very, very little money on that for most of the time that we can look at this chart over that same time period, where again, remember, it costs negative to borrow until here. This is when it starts to cost money to borrow. So they've been steadily raising the bond rate, where basically that just means that people who would have like sold any yen that they were borrowing immediately, those people are now forced to either reevaluate how much of the money they should have in bond-like assets versus in risk assets like crypto or tech stocks. And that'll kind of force over time as this continues to go up, and it's a pretty clear uptrend that's going to continue to go up. That'll put more pressure on them to sell their assets like Bitcoin just because they have to, because it's becoming more and more expensive essentially for them to borrow the currency in the first place, as well as the amount that they were going to get paid. So this is 2019. It's pretty low at that same time period, and then we see a spike up for both. But again, it's at like 4.24% now, whereas the bond yield rate over here is now 2.25. So we're talking about you're only getting a 2% bonus essentially for the yen carry trade versus, when these rates were over here, you're talking about like a 4% difference essentially, which for anyone watching this video who only has $100 or $300, it doesn't really make a difference. But when you're moving hundreds of millions of dollars or billions of dollars, 4% is a lot of money that you're earning for doing nothing but clicking a button on a screen, essentially, to move money from this place to that place. So that's broadly what is happening. Is it is becoming more appealing to keep money in Japanese bonds because the Japanese government wants more yen to come back to Japan itself. They want to unwind how much people are borrowing, so that money flows back to Japan itself, which is very much what the U.S. is also going to have to do, because Japan is our largest buyer of government debt. A lot of that is this, their GDP is currently 2.3 times their GDP is how much they're borrowing. So over time, you can see this clear trend as well. They're starting to borrow less as of 2020. They're having to realize okay, we can't sustain that. And a lot of what they're borrowing, reflected in this graph, is U.S. debt. So they're slowly in the process of reducing their exposure to their debt, and the largest debt that they have is the US dollar. So what that means is, and I talked about this in the stablecoin video, basically the US is losing their biggest customer for buying treasury bills in the form of the Japanese government. And what that means is they're going to need to find a new buyer for all of those treasury bills. Otherwise, we are going to have to continue to raise our own bond rate. This will have to continue to go up if there's not enough demand to actually buy the existing treasuries. So over time, that's going to put more pressure on assets, because if your bond is now paying 7-10% and the S&P is only paying 8 or 10%, now it becomes very appealing to keep your money in bonds instead of in stocks, which is what we're going to see as this continues to unwind over time. It really depends on if Japan is able to get it much lower than that, or if we just kind of assume it's going to stay, roughly equanimous with these prices here. But if we go back to this overall trend, this has been going on since 2021, that the price has really been struggling to earn against the US dollar. So now that we have the basics of that part of it, the interest rates, I'm going to click out of this. We just remember, again, now it costs money to borrow Japanese yen, and it used to not cost money. The overall amount of debt that the Japanese government has relative to the GDP of the country is going down, but will reach an inflection point at some point in the near future. And if they continue to lose their primary buyer, the US, if they continue to lose their primary buyer of treasury bonds, it's going to reduce the demand and therefore increase the yield rates to make them more appealing for people to buy them, which again will put pressure on stocks and things like Bitcoin. The bond rate is going up for the US as well as the Japanese government, which again, less money for risk assets, more money in safe, boring things. This is the population demographic curve for Japan. So I'm not going to talk about this a lot in this video. If you would like me to do this as another paid newsletter topic, please let me know. One of the factors that I am anticipating for like a severe bear market for Bitcoin at some point in the 2030s. So again, I don't think this is going to happen tomorrow or this year, but one of the factors that I think is really going to affect a prolonged bear market for Bitcoin is when this reaches retirement age. So if we assume that's about 65, that means we have about 15 years, roughly, depending on when this was taken. This is 2023, so whatever, 13 years. About a decade, a little bit more than a decade, before the largest portion of the Japanese population reaches retirement age. And they're just, as you can see, we'll compare this to the U.S. one. The U.S. has a healthy amount of babies, of younglings that we are raising to support our fat, able-bodied population. Whereas Japan does not have nearly as many people below 30 as they do 40 plus. Eventually, this is going to put tremendous stress on their economy. When this massive bulk, probably 40 to 60% of their population, reaches retirement age, and there's no one able-bodied to work, they're going to be really reliant on things like AI and robotics to actually kind of bridge the gap. And they're also going to be very reliant on countries like the US. Their allies specifically will need to basically prop up the Japanese yen to be stronger during that time period, or it's going to collapse, and it's going to collapse hard. That's why I don't think that like a severe bear market is possible for Bitcoin anytime soon. And this is like I'm the only one I've ever fucking heard who's talked about this. Quite frankly, most people like cannot fathom it going down for more than a year, let alone for. I don't think it would be more than about 6 to 8 years. But this is when I think it would happen. Is basically whenever this largest portion of the cohort of population gets to retirement age, and then ongoing, it just puts more and more stress on the Japanese economy. And there's some major failure that we don't really have data for. Like I don't think we have population collapse data in a like modern stock world. I don't think that that's happened in a meaningful way. So to think that that's not going to dramatically affect risk assets like Bitcoin, I'm sorry, but you're crazy. Like Bitcoin is 24/7. It's going to be one of the first things that sells in the event of a major collapse of the Japanese economy in the form of the demographic workforce. I really just put the US one here just to show you, what we're not even a healthy example, but this is a slightly healthier example where even if our aging population, which it seems like it's here, is about 35, which is pretty healthy for our country, I would say. We can't seem to get a president who's lower than about this age or this age, but it is what it is, So that's the most important part with the demographic collapse. We got to remember that overall, we're at a record amount of consecutive days of short positions in the yen. So people believe that the yen is going to continue to go down, which is putting more pressure on this trade again. We peaked in 2024, which we're about to go over on in the chart. But in general, the yield is depreciating and how much you can actually get for this trade. So when we think about borrowing, this is one of the things I wanted to point out because I just did the credit leverage video, which let me know if you enjoyed that video. That is one I'm going to continue to come back to because basically for the average person, the 0% balance transfer offer with your credit card is essentially what the yen carry trade is. So it would be a pain in the ass for you, a regular old person, to borrow a ton of Japanese dollars, sell them for U.S. treasuries or U.S. tech stocks or whatever, as opposed to just using your credit card for it. It's way easier and cheaper. But Forex, as we understand it, largely exists as of 1973. Now, what is important during that time period? 1971 is when Nixon takes us off the gold standard. So basically, what happened before is the U.S. had a ton of gold after 1945, and basically they had that because they helped prop up the economies all over the world. And what those other governments were doing with their deal for the U.S., because they all took out U.S. debt, and they had a deal that they could convert U.S. dollars into gold. So if I'm a country that wanted to rebuild after World War II, I would buy a ton of U.S. debt in the form of treasuries or other things like that. And then as I started to recover as a country, as my industries are back up and running, as I'm able to produce products and services again at large for the global economy, I would trade that U.S. debt for gold. And what was happening is over time, our gold reserve was going down and down and down, which would basically lose us reserve currency status as well as our edge, as a dominant world power. So when he takes us off the gold standard, we now have to find somewhere else, essentially, to put the value of the dollars because it's no longer in gold. So now we have to look elsewhere in order to do that. And what that does is it causes a tremendous bull market for gold from about 1973 '74, I believe, is when U.S. citizens are able to start holding it again, and that causes like a massive, massive bubble that happens in 1980 that it takes a long time for it to recover from. I did that in the gold video, and we'll go over gold briefly later on. I'm going to have to refresh all of these charts a million times. So let's go back to JPY. So JPY specifically has been in a downtrend since 2021. Now let's think about this logically, because I think this is actually something I haven't heard other people talk about in videos, and I do think it's very important. Most people were expecting an alt season, and in order to get an alt season, we need a tremendous amount of liquidity. So if the largest borrow trade on the planet, essentially, other than people, leveraging their real estate in order to buy other assets, this is one of the larger trades on the planet, is borrowing against the Japanese yen, selling it, and buying other assets. So if it's becoming weaker and weaker over time for you to borrow the Japanese yen, which again, at the lowest level since the early 90s, which was, right after another economic collapse in the early 90s, is what caused this. And then we saw, the spikes again into the Japanese stock market crash, as well as, the recovery from the Great Recession in the United States. So what we're looking for now is basically just to see, is this going to continue to break down? Are they going to be able to see some type of recovery? As we look at the US versus JPY chart real quick, you can see that this trend is over time, the dollar is also gaining, I guess in this instance, is gaining value at the moment against the yen. It's a complicated one to read. As this continues to happen, though, as the amount of yen per dollar continues to go up, it's going to kind of create an opportunity for the U.S. government to decide, okay, well, we're going to reinvest in the Japanese dollar. We're going to prop up the Japanese dollar essentially, with the difference between, again, this is a local peak for the yen. And as you can see, it's a bottom for the value of the US dollar versus the yen, and it's been raising steadily since that point. And again, this is roughly the bottom of the housing market. Stock market was 2009, but also roughly the peak of the gold run at the time. So we'll go over those in a little bit, but this is where we start to see a recovery for the amount of dollars per yen, which is a strong position for the U.S. to step in if it has to, if JPY is to continue to, break down from here, which at the moment, it seems kind of stable. This is the 12-month chart, so this is basically it dropped in 2024 and it kind of stayed still in 2025. And it's too early to tell, obviously, what it's going to do moving forward. But that does indicate that it's going to drop, which is obviously not good. For, again, it's going to become more and more expensive over time to borrow Japanese yen. And if we saw a peak of, how this is the amount of value for the yen, and this is at a time where it was still negative to borrow it. So since 2021 peak, it's become more and more expensive to borrow it, which is why right here, this is why we didn't see an alt season, because it's really expensive to borrow Japanese yen to put it towards speculative assets. And you can't get much lower on the risk curve, or higher on the risk curve rather, than altcoins. So there just simply wasn't any money to prop up those altcoins once we had confirmation that, we're probably at a bottom for the JPY USD pair, which is obviously, again, a big indicator of why we didn't see that liquidity flow into altcoins, and instead we're seeing it flow towards utility because we have to. We're going to see it move towards debt instruments and simple financial tools rather than, meme coins, even though I wanted Pengu to rise as much as any of you did, So this is something I want to go back to now quickly. This 2011 moment where US dollar value versus yen dropped, and also the yen value versus US dollar had risen. So this is a time period where I would imagine we were borrowing record amounts from the Japanese at that time. So specifically, what I want to use to see that is the housing market, which actually I don't even have to refresh this one. So this is the one that averages into quarters, I believe. Yeah, it does quarters instead of months. But on the other chart that I've talked about many, many times, this is our major flip is July. That's when we start to break down on the monthly SMA for that of the chart. And once we do that, once we interact with this SMA, we're breaking down. That's just what happens. It does not happen very often on the chart. There are literally, this is the only instance on the chart where that happens. It's the only time in 2008. So as it's doing that, it continues to bottom out. And where did it bottom? 2011, 2012, which again, as we just remembered, this would have been when it was the cheapest to borrow Japanese yen, because the Japanese yen is really at an all-time high against the US dollar at this time period. And therefore, people start borrowing en masse into the Japanese yen. Where do they put it? They put it in real estate, because real estate starts rising like a rocket from that point. Now, remembering gold as well. So this is when do we start to see a recovery? It's kind of hard to say. So to these actual levels, we don't see a recovery until 2016, which is a long time for us to get back to the highs for real estate. But at least to get out of this kind of trench here, it takes us until roughly here, 2013, to flip the moving average again. And then it's just a matter of time for us to continue to rise. But during that time period, for gold specifically, as you can see, this is that extended bear market I was talking about from 1980 to about 2006. Gold is boring during that whole time period. Once it's recovered that level in 2006, it can start running. And then again, housing market peaks around here and starts dropping. Gold drops with it for the rest of that year, but then it recovers and starts raising until about 2011, where it peaks, and then it's boring for an extended period of time. This is a big reason why I am of the opinion that gold is not done yet, even